Analysts have just downgraded Microsoft on the worries that their cloud business is expected to slow down in the near term. And in this video, let's dissect that analysis and see if that really should impact the overall valuation for Microsoft. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. And this one's a very interesting one because Microsoft actually had a week almost as bad as Tesla, and you guys already know how far Tesla has dropped. But first, let's get into this article and see why Microsoft shares have declined so much this week. So you can see here's the Barron's article. So it's saying that Microsoft stock did drop after a downgrade on a weaker cloud computing outlook. So that immediately scared me because I'm like, what is happening in the cloud computing business that I'm not aware of? Because I'm a big bull on the global cloud computing segments or just the growth of this business overall. It's one of the reasons why I'm invested in Alibaba, and it's one of the reasons why I follow Alphabet and Microsoft very closely. And so they're saying that the cloud business may be slowing faster than investors anticipate because of a maturing market as well as a tougher economic environment. Now, I will kindly disagree with the maturing market comment, but I do agree with the fact that we are in a near-term tougher economic environment. And so the analyst also says that sales at Microsoft Office software products are also likely to moderate this year as companies trim staff. So what? They moderate this year, but what does that mean for the ultimate valuation? And this is the point that I always try to make, where analysts are very short-term focused. They throw a multiple on next year's earnings, albeit they'll adjust that multiple as it sort of deems fit to make the valuation seem a little bit more realistic, but they're very short-term focused. And when we build the models, or at least when I build the models on this channel, I'm focusing really on its long-term intrinsic value. And so yeah, you can have a bumpy 2023. Who cares? What does the overall picture look like for the valuation, irrespective of these short-term concerns? And you can see in the article, UBS lowered their price target for the stock to $250 per share, which is not bad from $300 previously. So it is a pretty reasonable cut, right? It's a pretty big drop. But the companies, and they're saying that the company's valuation already feels fair, not cheap. And I would agree with that. I think the valuation is somewhat fair, not necessarily cheap, but I think it is getting cheap, right? And so like most technology companies, Microsoft did have a rough 2022 where the shares fell almost 30%. And I'll actually show you that because as part of the tracker, the Patreons get access to a 52-week high and low for the S&P 500 list. And so I'll show you guys that. And then you guys know that just because of the slowing environment, Microsoft did announce it'd be cutting some jobs to adjust for the coming fiscal year. And I did cover that when that was announced on this channel. Now, here's that list I was talking about. This is I just sorted it for the worst performing stocks over the past week. Notice how Microsoft was 8th in the top 10 worst performing stocks in the S&P 500 as of the week ending January 5th, 2023, not 2022. And notice that they're only a couple of points above or below Tesla, who also had a horrible week. But as you can imagine, Tesla has had a disastrous year or even month, right? On the year, they're down almost 70%. And just compare that to Microsoft, where, the article is right, where Microsoft is down 30% over the last 52 weeks. But how should we be thinking about the overall growth picture of the cloud business as we move into the medium to long term? Now, one area where I like to go is this Canalys sort of like analysis over the industry. You guys have seen me sort of talk about this as it relates to Alibaba because they do provide China numbers as well. But look, they said growth on global cloud services spends slows to the lowest rate ever in Q3 2022. So this is probably what's getting the analysts alarmed, and that's fine. But notice the headline, I think, because you're seeing a 28% year-over-year increase, so it's not necessarily slow. So I wrote here that the headline makes the year-over-year growth sound much worse than it actually is. But this does suggest that my 25% year-over-year growth expectation, which I'll show you next, for the next 5 years for Azure might be a bit aggressive, right? And so worldwide cloud infrastructure expenditure increased 28% year-over-year on the third quarter of 2022. And of course, you guys know that AWS, Azure, and Google Cloud remain the top three providers. I'd say AWS and Microsoft Azure take the lion's share, and you can actually kind of see that, right? So huge pie, smaller pie, and then everyone else. And so, does this really spell disaster for me? No. I could see slowdown in 2023 as, people delay some projects as they're trying to just sort of like right size their bottom line, just focus on profitability. But I still think, and I believe, I'll defend that with backup later in this video, I still believe that the cloud business as a whole is expected to grow at a pretty healthy clip. And so here's that analysis. Now, this is just a quick Google search. I'm trying to just use free sources right now. And so you have Statistica, which you can search. So this is their update as of November 22. So you can see that, the cloud business is still expected to grow at a CAGR of 13.4%. But, the point that I would make there is that if you're forecasting Azure to grow at 25% in that same time period, are you being a little bit aggressive? I mean, part of that Azure is that they have other cloud products and they're expanding more products. So there's a bit of like an upgrading in terms of like the products that Microsoft clients are going to be using in the next sort of like medium term. And so there is that argument. But, if somebody were to make the argument that, hey, you should probably sort of taper that expectation down a bit, I would say that that's reasonable as well. And so before we go into the model, I just want to dive a little bit deeper into this article. And so notice it says that the long-term demand for enterprise digitalization remains strong. So even here, they agree with me, these analysts, that the long-term picture is the same. So it's very interesting what the headline of this article is, right? And so as a move to cloud remains the best way for today's businesses to do more with less. So the point that I'm making here is that any business that helps other businesses make more money is going to be a success. So my, medium to long-term thesis on the cloud business remains unchanged despite this article. And even they don't believe that the thesis is changing. And so under economic pressure, enterprise customers are choosing to reduce operational risks by lowering their IT budgets. That's a good move. But, right now you're seeing inevitable project delays as some customers get skittish about the economic outlook. So they just don't want to outlay that cash right now, but that doesn't mean that they're not going to ultimately move on to the cloud. So that just tells me that a slowdown in 2023 could mean an outperformance in 2024, so like a catch-up. And so I don't think this is a risk. I think this is an opportunity. Let the growth come to a temporary standstill and let the cloud provider stocks sink in on the news. I'll be there to buy up the security. So once again, this is one of those let it come to me. So I'm waiting on Alphabet. Look, it might never ever come to me, and I'm comfortable with not ever buying the security, but I'm waiting on Alphabet, and I'm definitely waiting on Microsoft. Now, I would pay more of a premium for Microsoft security than I would for Alphabet, but these are two absolutely phenomenal companies at the end of the day. And so notice Azure came in second with a 22% market share after growing 35% annually, and growth was driven by strong renewal execution. And so this is why I think, in the next couple of years, they will continue to grow this segment out at 25%. But once again, if you guys believe that that is a little bit optimistic, I wouldn't fault you for believing that. And so Microsoft continues to push to host more of its own services on Azure, and they continue to grow geographically, so like internationally. So notice they announced the launch of their new data center region in Qatar, making a major achievement for the company as it's the first hyperscaler to deliver enterprise-grade services in that country. And now let's just dive into the model a little bit so you can see that cloud really has been a jewel for Microsoft, especially in 2018 and beyond. And so, notice that they got 25%, they went from 25% of the overall revenue picture to 38% of overall revenues. And the reason for that is because this segment has grown at rates faster than any other segment. Now, this model is available to all the Patreons at that lower tier. And so if you want access to this model, you can join us at that lower tier and get access to it. Now, notice Intelligent Cloud also has seen somewhat expanding margins. So, being in the average mid-30s to the low 40s in the last couple of years. And so not only is it growing out substantially, but they're doing it at higher margins. So that's a very exciting opportunity, because really what it's saying is that the services are becoming more and more valuable. And this could suggest that they have a real moat if they have such high profit margins. Recall, guys, that Alibaba does not yet have profitability, has not reached profitability in its cloud segment, but AWS and Azure, Microsoft's products, have achieved significant profitability. And so you're already operating with a sort of head start if you acquire these companies for your portfolio in terms of playing the cloud growth story. But the million-dollar question is, how should we expect this segment or company as a whole to grow out in the medium to long term? Well, let's dive right into it. So here's where my valuation, look guys, I will always call myself out if I'm just like overly optimistic on something, but notice that here's where my valuation might come under some trouble. I'm forecasting cloud to grow at 25% annually until 2027. So that's 2023 is pretty much guaranteed that it'll grow 25, but then 1, 2, 3, 4 more years where I expect 25% annualized growth. Is that reasonable? I don't know. I think you could question that, right? And so, I do have it declined to 15% in 2028, but the question is, I could be very optimistic here. But overall, notice that I'm growing revenues out at that mid double digits range, the 15%, then going down to 11%. So I think, you might get outperformance in the productivity segment, or, some outperformance in the personal computing segment that offsets some of the optimism here. So that's kind of how I'm thinking about it. Like, this is sort of like my best guess, but overall, I'm not really expecting, substantial levels of growth for the business overall, but am I expecting too much? I might be, right? So you guys could argue that, but that's kind of where I'm at right now. And so what does that mean for the valuation? Well, I like using a terminal multiple of 20 times earnings just because Microsoft is firing on all cylinders, and I do expect them to do that in the sort of like long term. And so the story remains the same. Despite the company trading lower than my intrinsic value, there still isn't a large margin of safety, but it likely will get that margin of safety if the economy further deteriorates. So they're trading at around 24 times where I expect earnings to be this year. So it's a 4.2% equity yield. So, there's a lot of growth expected even with the current share price based on where earnings are expected to come in. But it's not expensive, right? This is why the analyst is saying that this is somewhat fairly valued. Now, what happens to the valuation if you taper down the growth? And so here's where, like, if you get access to the model, I actually tapered down the growth, and this is kind of where I'm going to keep it. So this might be a more realistic valuation, so I taper it down in 2024 and then taper it down a bit more in 2025 and then bring it down to 15%. So I think this is more realistic, but once again, it's not making a super material impact to the overall revenue growth rate, but you will see that this will bring down the valuation a little bit. So you can see it does bring down the valuation a little bit. We were over $300 per share in the previous one. Now we're at $290. So I'd say 300, call it even, right? And so, is this company worth buying under $200 per share, or even like the lower it goes? $150 would be phenomenal, but yeah, under $200 per share would be pretty interesting, especially because I'm willing to pay more for Microsoft than I'm willing to pay for any other company. Microsoft is my #1 favorite company in the world right now, and so it's still undervalued overall, even with that very realistic valuation. But in a subsequent video, I'm going to start looking at the cash secured puts with you, just to keep this video's timeline in some sort of like realistic manner, or like not keep making it too long. But we'll look at the cash secured put opportunities for this, and I'll walk you through the calculator that I have that I make available to you guys for free. Now, if you want access to that Microsoft model, the Alphabet model, the Tesla model, and all the Alibaba model, all the models that the Patreons get access to, you can get access to that at the lower tier. Now, the other thing is, this Saturday, we're actually having a live call, and we have a call every month. So if you want to join us, you can join us at that, higher call tier. Or also, what I'm making available is for people who are at this lower tier who are considering just experiencing the live call because they're considering upgrading. If you're joined the lower tier and you want to experience the upper tier call, you can just message me and I'll give you a link to the call, because I enjoy the fact when you guys join me. Now, I recently put out a video on the best stocks that are recommended by Barron's for 2023. And I did a full deep dive into one name that they do have on the list, which is Alphabet, which is very key, especially in relation to this video, because Alphabet is another name in sort of like that cloud space. So if you've missed that video, no problem. You can get access to it right here.